yearly load is going to be 5,300 crores only. And the total revenue of all the telecom companies is 2 lakh crore plus.
We scrambled and found some money in the coffers and we made a partial payment.
You're not going to tell me how much you've decided to pay?
No, I'm not going to tell you.
Is it sizable? Will it bridge the fiscal deficit?
We could have a very nice holiday of that amount.
Inevitable outcome of this auction and 2014 auction that the spectrum prices has become 9 to 10 times administered prices.
Telecom companies have answered the SOS sent by the government. The 4.1% fiscal deficit target has been achieved. Good evening. Thanks very much for joining us on India Business Hour. Here's a look at the other headlines that we're tracking this evening. The government meets the 4.1% fiscal deficit target thanks to telcos answering government's cry for help. Telecom companies make upfront payments worth between 8 to 9,000 crore rupees. Expenditure curbs and dividend payouts from PSUs also help plug the 45,000 crore rupee fiscal gap.
We paid 75,000 crores to the government in the last 5 years. Since Vodafone has come to India, which is 8 years ago, we paid zero to our shareholders.
On his last day as Vodafone India's CEO, Marten Pieters mounts another offensive against the government, says regulatory framework works against telecom companies, adds that tariffs will go up after the spectrum auctions, reiterates the commitment to list the India business, but says it may not happen anytime soon. It's a long road to recovery. Core sector grows by just 1.4% in February, the slowest pace in the last 4 months. Output from steel, fertilizer and refinery products contract. A rollercoaster ride on the Lal Street markets nosedive in the last hour to wipe out all the gains, but FY15 has been a stellar year with the Nifty surging by a whopping 27%. The marathon negotiations between the West and Iran over a nuclear deal go down to the wire. Russia's foreign minister says the prospects of a deal are very good. Crude prices fall with Brent dipping towards the $55 mark. Profit booking on Wall Street after yesterday's bumper rally. The Dow clocks triple-digit losses. European markets also stumble. After getting battered for the last few quarters, IOC is all set to report a healthy profit in FY15. The company also expects zero inventory losses and under-recoveries have come down to just 3,000 crore rupees. All oil and gas stocks rally in trade today. That's an exclusive. The Commerce Ministry takes yet another stab to revive special economic zones, proposes a single window clearance for SEZs at the level of the state government, but MAT and DDT are not going away anytime soon. And the first foreign trade policy of the Modi government set to be unveiled tomorrow. Big push is expected for exports of merchandise and services. Let's start off with the market action. It's been a day of high drama on the Lal Street. What started out as a strong day for the bulls ended on a whimper, and that was all thanks to a last-hour nosedive. The Nifty surging past 8,500. That was in early trade, but then all of those gains were wiped out, and the market closed just shy of that level for the Nifty. The Sensex could also not hold above the 28,000 mark. Once again, markets coming under selling pressure towards late afternoon. Amidst all of this chaos, the mid-caps did manage to hold their head above water. The mid-cap index regaining the 13,000 mark. But that's the action for today. Let's rewind just a tad. Nigel is standing by with a wrap of the key highlights of the financial year that ends today. Nigel, it's been an exceptional year for our markets, hasn't it?
Well, it's been a great financial year for our own markets. The Nifty has given you gains of around 27%. The Bank Nifty has given you gains in excess of around 40%. And the mid-cap and the small-cap space, they've given you returns of around 50% plus. The big outperforming sector has to be the pharma space. That's given you returns in excess of around 65%. And a few of the stocks that are up for you in your screen, Lupin, Sun Pharma, as well as Cipla, all of them are higher by more than 75 to around 80% just in the last 1 year. Take a look at some of those banking stocks. A new entrant, Yes Bank, that one's close to have doubled your money just in the last 1 year. And Axis Bank as well as Kotak Bank, they find a mention over there. But banking index has outperformed. That's because SBI, ICICI Bank as well as HDFC Bank, all of them have close to around 70% weightage on the Bank Nifty. All of them, in fact, have given you returns of around 28% to around 40%. The other heavyweight stocks, HDFC, L&T as well as Infosys, they have given you returns in excess of around 30%. Cement stocks, a bit of disparity over there. ACC is high by only 13%, while Ultratech Cement, that's the big heavyweight over there. That's given you returns in excess of around 35%. A couple of losers up for you on your screen. Tata Steel as well as Kane India, they've given you cuts of around 20% to more than 30%. But the real big outperformers have been from the broader market. Century Ply, big returns were there. Hitachi Homes, big returns were there as well. IFB Industries, Skytex, all of them in fact flashing for you on the screen. Maxwell as well, finds a mention are there. They're giving you returns of around 400, 500, 600 as well as 700%. So that's really where the big money was.
All right, a fabulous end to FY15. Nigel, appreciate you joining us with those details. Let's talk about macros now. Is the Indian economy on the mend? Macroeconomic indicators continue to paint a mixed or rather confusing picture. In February, the growth of 8 core industries has slowed down to its lowest level in 4 months. The growth rate in February stands at 1.4%. That is slower than the 1.8% clocked in January. Not just that, core industries have grown by 3.8% from April. This is also from February to April. This is also slower than the growth rate of 4.2% clocked in the last financial year. Growth in steel, fertilizer and refinery products, the main culprits for this marginal slowdown. But on the other hand, coal, cement and electricity continue to clock healthy growth rates, providing some solace. So it doesn't look good there as far as the core sector data is concerned. But even as growth remains a concern, the government has managed to meet its fiscal deficit target, and thanks to telecom companies. Sources say the centre has met the 4.1% fiscal deficit target for FY15. This after telecom companies answered the government's call to make early upfront payments for spectrum. The centre has managed to rake in between 8,000 to 9,000 crore rupees from telecom companies. Sources say Airtel has paid about 5,000 crore rupees, and we understand that Idea may have paid about that much as well. Vodafone, of course, has made the upfront payment but has not confirmed to us what that payment amount is. The centre was staring at a fiscal gap of about 45,000 crore rupees, and that has now been bridged thanks to dividend payments from state-run companies like NTPC and the payments made by telecom companies like Idea, Bharti and Vodafone. And speaking of telecom companies, today is the last day in office for Vodafone India's CEO Marten Pieters, the longest-serving chief executive of any telecom company in India. He leaves office after a 6-year stint. I spoke exclusively to him earlier today. While he remained tight-lipped about the amount the company's upfront payment to the government is, he did open up on a wide range of issues, including hurdles faced by telecom companies in India. One of the most vociferous critics of the government, Pieters, said the regulatory framework works against telecom companies. He also made it clear that tariffs will go up, not just because of the spectrum auctions. He also pointed out that consolidation is inevitable, but he doesn't see that happening, at least not over the next 4 to 5 years. Let me ask you about whether you decided to, in national interest, make the upfront payment to the government on the 31st of March to help them bridge the fiscal deficit target.
We scrambled and found some money in the coffers, and we made a partial payment.
You came to India when you were 56. Vodafone was the 4th largest player. You've now taken it to become the 2nd largest telecom company after Bharti Airtel. In 6 years, you've doubled the size of the business to 40,000 crore rupees. EBITDA margins of about 30%. Vodafone India has the largest voice and data traffic usage within the Vodafone group. This sounds like a dream story. It sounds like a walk in the park. Yet, you've always maintained that India is perhaps the hardest place to do business in.
Telecoms market in India is challenging for various reasons. One is that there is a strict regulation. Second is that the industry structure is so that there are many players, many more than in most other countries in the world. And there is also very little spectrum available. And that all together makes it really tough to be a profitable telecom operator in India.
Yet you are, I believe, the most efficient opco within the Vodafone group of opcos. One would say that if it's so tough to do business in India, how do you explain these numbers?
I can give you another statistic. We paid 75,000 crores to the government in the last 5 years. Since Vodafone has come to India, which is 8 years ago, we paid 0 to our shareholders. So we might be very efficient, we might be very big, but we don't give returns to our shareholders. So how long can you as a company only work actually de facto for the government? That's the bigger question here.
We just had Idea on the channel talk about how they will be forced to do a significant hike in tariffs. What about Vodafone? Do you believe, minus what's happened as far as the spectrum auction is concerned, because you said that that isn't a direct correlation in terms of what happens to tariffs, but do you feel the need for a significant or even a minor hike in tariffs at this point in time?
We have seen,
and do you have the capacity to be able to pass it on?
We will have to be able to increase our prices, because this is still an inflationary country. It's maybe no longer so high as it was a few years ago, but it is still 6.5%. So even if we would keep our nominal prices equal, the same, it would mean that every year your price actually goes down by 6.5%.
Yet you have some players now, Idea openly talking about a tariff hike. So are you going to be able to follow suit?
We will try to increase prices, as I said, because we need price increases due to inflation.
Let me ask you about the unfinished agenda, the Vodafone IPO. You, in the past, said that it was not something that was held up on account of, it was not held up because of the tax-related issues, but it was held up because investors had concerns about the uncertainty with regards to the regulatory environment. Now that you've been able to renew your license, the spectrum auctions are over and done with, do you believe that it makes a business sense to go ahead for the IPO anytime soon?
Over and over, we have said that being part of the Indian society in terms of a listed company here is probably the right thing to do over time.
What is going to be the impact of the spectrum payout as far as the balance sheet is concerned, on cash flows, on your debt position?
Well, our debt position will, of course, be worse. Again, we came out and I think half-year results was about 51,000 crore of debt. We have to pay 25,000 crores in the next 20 years, actually in the next 12 years to the government for this spectrum. So you can imagine where the debt position is going.
In terms of your capex plans going forward?
We have always invested, let's say, roughly around $1 billion a year. We did last year and this year more, which was based on the fact that Vodafone did the famous Spring project. Some of the money that came out of the sale of Verizon in the US was put back into networks. We have nearly finished that program. And after that, I foresee that depending on, of course, what our margins are and what our revenues do, we will keep investing at more or less the same level.
You know, there's been so much talk about consolidation. Over the last several years, every time we speak, we talk about the possibility of consolidation, yet we actually haven't seen that take place. When do you really see consolidation in the market? And is Vodafone likely to play consolidator?
It won't happen if it doesn't get some form of facilitation from the government. The easiest way to consolidate is, of course, by making spectrum available to others. Some operators don't use it optimally or don't use it at all. So by making spectrum trading and spectrum sharing available, that would be really helpful. Actually, that was promised twice last year and it didn't happen.
And they're still promising that the guidelines will be out very shortly.
I've heard that now several times, so let's hope that it happens this time.
Do you really see Vodafone playing the role of consolidator in the Indian market?
We've always said that we are a consolidator by nature, because this is the only business we are in.
You were talking to TTSL, right?
We have been looking at various opportunities in the market. I will not comment on any one specific, but so far, due to indeed two things, that most companies have quite a high expectation if it comes to pricing, and that combined with a very often weak balance sheet makes it not easy to make a business case for that.
So if not 9, what do you think would be the ideal number for the Indian market? Because in the past you've spoken about how 3 or 4 players would be enough for a market like India. And that's the experience globally as well. And these businesses then are profitable businesses. They invest in network and so on and so forth. What would be the ideal number to your mind?
The ideal number is still 3 to 4, but I can't see it happen anytime soon. If you look at the structure of the industry and the players there, I think we might get very lucky if we can bring it down maybe over the next 8 years to 6 or so.
Consolidation, not for another 8 years, and definitely not bringing it down to 3 or 4 telecom players, but perhaps 6 players would be something that we could see. But all of this is far, far away. That's the outgoing CEO of Vodafone, Marten Pieters, in an exclusive conversation. You can catch more of that on CNBC TV 18. It's largely been status quo as far as most small saving rates are concerned. The government has decided to keep the PPF rate unchanged for the next fiscal, leaving it at 8.7%. There has been some marginal tinkering in the senior citizen and Sukanya Samriddhi account scheme. Sapna standing by with the details. Sapna, so the good news is that there has been no downside or downward revision.
Absolutely. In fact, what we get to pick up is the fact that since overall there's an expectation that interest rates may trend lower in the coming months in the new financial. Keeping that in mind, the government has not really gone in for a hike in the interest rates because that's an administered rate. It could be a signal from the government side itself, particularly when they want PSU banks to lower rates after the RBI repo rate cut by around 0.5%. So that's a perspective. But on the upside, at least what the interest rates are, they are more or less there and on the same lines. And if you actually compare these products with other products in the market, the interest rates are not too bad. So basically here, they have resisted the the inclination to actually possibly bring the rates down by 10 to 15 basis points. That they have resisted that, and they have tried to maintain the same rates for FY16. So the advantage here will be that even when interest rates overall start trending down, especially on deposits, you will have the small savings rate at least being protected, and that way the funds which come in from this route is also an important source of borrowing for the central government. So they really don't want the kitty to take a hit on that front. But yes, talking of those two particular schemes, the Shukanya Shrimati scheme and the senior citizen scheme, very, very marginal 0.1% hike has happened over there. In fact, 1 basis point for FY16.
All right, Sapna, appreciate you joining us. As we've been pointing out, at least the good news is that there has been no cut there in the small savings rate. Now, India's foreign trade policy expired a year ago, and it has been an ad hoc extension since April 2014. The Commerce and Industry Ministry is all set to unveil the Modi government's first foreign trade policy scheme related to export subs for merchandise will be realigned, and for the first time, services exports are likely to get a big push through lucrative incentives. Rituparna Bhuyan and Ashmit Kumar take you through the key expectations.
Indian merchandise exports have been going through a rough patch for the past couple of years. The country missed its goods export target in FY13 and FY14. Moreover, with negative exports growth during December, January and February, India will miss its exports target for FY15. In this backdrop, the new foreign trade policy will seek to stop the downslide in India's exports.
The global scenario has definitely deteriorated in the last 3 months or so, and the chances are that the global situation will continue to be grim in next few months. The major reason is that the fall in crude commodity and metal prices. Secondly, we are seeing the unrest in the Middle East, and there are a problem in the CIS region also.
Key interventions expected to be announced include realigning the stops that incentivize exports of specific products and exports to identified geographies. This will be done by tweaking the focus market and focus product schemes. Sources said that more products and countries are likely to be added to export promotion schemes in the policy. Sources also added that the foreign trade policy will for the first time lay a common strategy for India's foreign trade agreements. In addition, a massive exercise to do away with complex paperwork will be initiated. Sources said that the DGFT had proposed 100 measures to make exports and imports easier.
We have always said that if transaction cost is reduced by 50% of what is at present, that means it may be brought down in the range of 2.5 to 4%. And if you reduce it by 2.5 to 4% for the export sector, and you apply this on an export base of 300 billion plus, you provide a support of 10 billion to around 12-13 billion to the export sector without cost to the exchequer.
The big bang change this time around will be the services exports. Services exports by Indian companies will be eligible for several SOPs. This means that medical care, tourism, consultancy and architecture services rendered to foreigners will be eligible for duty-free scrips that can be used to offset service tax.
The foreign trade policy will be aligned with the Make in India and the Digital India programs. But to compete in the international market, Indian exporters will need far more measures, which includes implementation of GST, faster transit through road and rail networks, and last but not the least, decongestion of clogged ports. But these measures are not the subject matter of Commerce and Industry Ministry and will need support from other departments. In New Delhi, Rituparna Bhuyan.
Well, foreign trade policy, the first of the Modi government. Watch out for that tomorrow. Now, the union budget did not have any concrete measures to revive the special economic zones, but the Commerce Ministry is batting for a single window clearance at the state level to breathe life into SEZs. The ministry has invited state governments for a meeting, but any tax share for SEZs will have to wait. Sources say the minimum alternate tax and the dividend distribution tax are not going away anytime soon. These are contentious issues. This budget didn't address them. It's unlikely that we are going to see any changes on either of those two fronts, at least ahead of the budget next year. And in what comes as a major relief for fertilizer companies, the Union Cabinet has approved a gas pooling policy. However, details remain sketchy as the centre did not elaborate how the gas pooling will work. 30 urea units will benefit from this proposed gas pooling mechanism. The centre has also proposed to set up a 2,000-kilometre gas pipeline between Haldia in West Bengal and Jagdishpur in Uttar Pradesh. This will cost 10,000 crore rupees. Speaking to the media after the Cabinet, INB Minister Ravi Shankar Prasad hailed it a historic moment for farmers, but as we said, details still sketchy.
इस पावर जो गैस पूलिंग का आज हमने फैसला किया है, इसके कारण से हम लगभग 1550 करोड़ रुपए की सब्सिडी को ईयरली सेव करेंगे और ऑपरेशनल एफिशिएंसी बढ़ेगी, गैस का यूनिफॉर्म डिस्ट्रीब्यूशन होगा और किसानों के लिए जो यूरिया की खपत होती है, जिसके लिए परेशानी होती है, उसमें बहुत ही राहत मिलेगी.
Well, that's the telecom minister there on the decisions taken by the cabinet, and obviously the cabinet has also decided to re-promulgate the land ordinance. Remember, this was expected because the government had decided to prorogue the budget session. If you prorogue the session, means that you could have re-promulgated the land ordinance. Joining us now is from the Congress party, Mr. Manish Tiwari. Mr. Tiwari, appreciate you joining us. This is news that's just coming in. We understand that the government has now decided to re-promulgate the land ordinance. Your first reaction?
Well, if the information is correct, then it is most unfortunate. It tantamounts to trampling over all parliamentary traditions. In the first instance, the land ordinance was issued after the winter session of the parliament had just culminated. If the government really felt that there was substance in its argument, they should have waited, or they should have brought it before the winter session of parliament. But be that as it may, they decided to take the ordinance route, and now when they know that in the Rajya Sabha they do not have the numbers, so therefore they are resorting to the chicanery of re-promulgation, especially when Parliament is in session, and both the Houses of Parliament...
they've decided to prorogue the budget session, so that means they're well within their right to re-promulgate the ordinance.
Which is in itself a complete travesty of parliamentary democracy, because the budget session does not get prorogued in this manner. The budget session adjourns in order to allow the standing committees to really scrutinize the budget proposals of each ministry in great detail and extenso. So therefore, the very act of proroguing the budget session and then, going in for a fresh notification is itself a complete murder of democracy. So therefore, this government has decided that they will go to any extent in order to pay back all their corporate friends who backed them during the elections. I know CNBC TV 18 may not like this terminology, but this unfortunately is the reality, and therefore you today find that even democracy has been sacrificed at the altar of crony capitalism.
CNBC TV 18 has absolutely no issues with what you said, Mr. Tiwari. In fact, we have been leading the campaign suggesting that doing away with the consent clause is not a good idea. So you have us supporting that point of view at least. But on the issue of what happens from here on, because now that this ordinance, we understand, has been re-promulgated, it allows the government to buy itself more time to try and get the opposition on board. I know that the Congress party is launching a massive campaign ahead of the budget session, or now a new session of Parliament which will resume on the 20th of April. What is your strategy going to be?
Well, first of all, the legality of proroguing the budget session itself is going to come into question, because how can you prorogue a session without the budget having been passed? So therefore, can you split a budget session into two, that you present the budget in one session and then you expect it to be passed in the next? So I guess when Parliament reassembles, this blatant illegality of the manner in which they have gone about it may even bring the entire budget exercise into question. Because if you've prorogued the Parliament without passing the finance bill, without passing the budget, then therefore what is the sanctity of that budget document that you've presented? Ipso facto, it will raise the question whether the entire budget itself would lapse.
Well, those are serious comments coming in there from Manish Tiwari of the Congress party. Always a pleasure speaking with you. Thanks very much for joining us. Another quick reaction to what we understand is a decision taken by the government to re-promulgate the ordinance. Mohammed Salim of the CPIM joins us. Mr. Salim, appreciate you joining us. This is not confirmed news at this point in time. This is source-based information which suggests that the government has decided to re-promulgate the land ordinance to buy itself more time, and of course the proroguing of the budget session, which is already happened. Your first comments?
They're just promulgating or not, even if it is a case, but they prorogue the House because of only this one. because it's a total ad hocism. We have a very elaborate arrangement for legislation. We have a constitutional provision. We have convention in parliament, and in parliament is bicameral. But government knows they don't have a majority in Rajya Sabha, and even if with brute majority in Lok Sabha, they can just go ahead, but they will be stuck. So knowing fully well, how can they just repromulgate and prorogue this Rajya Sabha? Because Manish was right saying Parliament budget session was two part. And in one case, the demands of grants were proposed, and then the committees will discuss, and in the second part, they will get it passed. But now they have to bring in another session, monsoon or pre-monsoon. They cannot convene twice of the same budget session.
Right.
And so government is stuck with the mismanagement and ill-advised.
Mr. Salim, my final question to you, what happens now if the session were to reconvene, a fresh session were to reconvene on the 20th of April? What is going to be the strategy of the CPIM? Will you join hands, for instance, with the Congress party that has now officially said it will mount a campaign against this?
It's not a question of joining hands with the Congress. Majority of the people are against this draconian land bill, and we were opposing for long, and it took 10 years to come out with some kind of consensus to have this land reform amended act. But now I don't know what government is trying to give this message to whom. The farmers are against, the majority of the Indian population is against, the majority of the parliamentarians are opposed. Now I think this will give us the opportunity to go to the people further, and you will see how the people are reacting. The farmers are reacting and responding. So it's a question of opposing this land bill as well as opposing this government who is so insensitive to the farmers' case.
All right, Mr. Salim, we'll have to leave it there. Appreciate you joining us here on India Business Hour. Well, that's a big decision coming in from the government. Unofficially, sources telling us that the government has decided to repromulgate the controversial land ordinance. You've heard political reactions coming in. This is not going to be an easy session for the government to get through as and when Parliament does reconvene on the 20th of April. But for now, from all of us here, goodbye. Many thanks for watching.